Welcome again. This is the AAZSS Trading Academy, right? And today we'll be talking about forex terminology, right? The language of the market, and it's very important you understand this, right? Get that now. So every profession has its own language, and forex is no different. So imagine trying to play football without knowing what offside means, right? Or going to school without coming across the subject mathematics. The same goes to trading. If you don't know the lingo, you'll be lost. But don't worry, I've got you, right? So forex terminologies. So let's get started. Let's get started into it. So forex terminologies, they common terms. So the first one there over here is PIP, right? PIP, small movement, smallest price movement, and PIP stand for percentage in points. Apologies, I didn't write that over there. All right, percentage in points. PIF stands for percentage in point. It is the smallest price movement in a currency pair. Most currency pairs, for example, Euro USD. Right. If price move from 1.1000 to 1.1001. Right. Okay. Let me see if I'll write that over there, please. So Euro USD move from this price to 1.1001. 1.1001. This one here. Right here. So now this is one pip movement, right? It's one pip movement. This is I'm giving an example for Euro USD, right? So now if price move from 1.1000 to 1.1001, so it is a one pip movement, right? It is one pip movement. Don't worry, we'll cover how to calculate its value in next section, right? As we move, we'll learn how to calculate the value. But just know that pip is the price percentage in point, and it is the smallest movement in most currency pairs. I'll just give an example. Let's see, Euro USD moved from 1.1000 to 1.1001. This is a one pip movement, right? It's a one pip movement. One pip movement. And I hope you understand that. So now the next thing here is lot, right? Lot size. Lot is the size of the trade, right? A lot is how much you are trading. You understand that? For example, one standard lot is 100,000 units of a currency, right? I'll still talk about currency. I'll talk about pairs in the next slide, right? So one standard lot is 100,000 unit of currency. So you can trade a mini lot, which is 0.1. I seem to write that out. So you can trade um, mini lots, mini lots, mini lot, which is the um, 0.1, right? 0.1, and it is equivalent to 10,000. Sorry, apologies for this. 10,000 units, right? So mini lots, which is 0.1, is 10,000 units of the currency. So micro lots, same thing, 0.01, which is the 1,000 units. So we'll dive deeper later. I just want you to understand the terminology. So by the time I'm explaining lots in the next videos we are going to do, you understand that okay, lot is the amount you are trading. It's how much you are trading, right? I want you to understand that very well. It is not complicated, right? want to understand that. So the next thing is, as we move, you understand that, and I'll explain more better about lot and how to calculate lot. We'll dive deeper into that. So the next one here is leverage. So leverage is the borrowed capital to increase position lot size. Remember, I talked about a leverage in the previous video. I said I was going to explain that, right? So we don't have enough money to trade the market. You understand that we don't have enough money to trade market, so we use leverage. So leverage gives you that gives you that am I gonna put it? Cut from leverage. Cut from leverage. Cut from leverage. Cut from leverage. 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 Cut from leverage. One, two, three, and action. The next one here is leverage. So leverage is borrowed capital to increase position lot size, right? So we don't have enough money to trade the market. So if we have a system whereby we have an increased position size, we can trade, right? So leverage is the borrowed capital to increase position size. So I will still explain that briefly in the next video. So just keep to this. The next one here is bid, ask, and spread price, right? So bid price is a broker, bid is the price the broker is willing to pay you to sell, right? And the ask price is the price the broker is willing to pay you to buy. So the difference between the bid and ask price is the spread, right? That you look at the spread, the next one there, the next one here, right? Spread, the difference between buy and sell price is a spread. Don't get that wrong. Difference between the bid and ask price, right? So the bid is the sell, the ask is the ask here, ask price is the buy, right? It's buy price, right? So the spread is the difference between the buy and the sell price. Get that right? It's just like you are shopping, it's just like shopping a cuts from bid and ask price. So the next one here is bid, ask, spread price, right? So bid price is the price the broker is willing to pay you to sell, and the ask price is the price the broker is willing to pay you to buy. So the difference between bid and ask price is the spread, right? It's like a shop buying wholesales and selling at retails, right? You understand that? So the next one over there is a margin, equity, and free margin. Margin, equity, and free margin. So margin is the amount your broker owes aside when you open a trade, right? Is the amount your broker owes aside when you open a trade. So margin is the amount required to open a trade. So equity is the account balance plus or minus any trade open, right? Free margin is how much is left to open new trades. So margin is the amount required to open a trade. Your equity is the amount account balance plus or minus. Okay, for example, now I have a $100 in my account, right? And I have a trade open on Euro USD with $20 profit, right? So my equity will show $120, right? So it includes my account balance and the profit or loss, right? My account balance plus or minus the trade that is open. You understand that? So if I have a $20 loss, so my equity will be showing $80. So as we move on, when you open a demo account, you understand that very well. So the next one over here is stop loss, take profits. So which are the risk and reward control tools, right? So stop loss protect your account when price goes against you, right? It protects your account. For example, you can set your stop loss. Okay, I just want to lose $2, nothing more than I set your stop loss to $2. So it controls your loss, right? It protects your account when price go against you, right? And take profit locks in your win. I can set my take profit. Okay, I want to get the profit of just $20, and you set it to $20. So when price get there, boom, your trade is closed. You understand? So never trade without a stop loss. It is very, very important. Never trade without a stop loss. Never trade without a stop loss. That is how most beginners blow their accounts, right? So the next one slide over here, I'm talking about currency pairs, right? Currency pair. Remember in the previous video I said I was going to explain a bit about currency pairs, right? So in Forex, we trade currency pairs like Euro USD you see here, right? The first currency is the base currency. The second currency is the quote currency. Please get that right. Get that right. And any currency pair you see, you can see Euro USD, we have GBP USD, we have AUD USD, we have GBP AUD, GBP CAD, USD CAD, USD JPY. We have pairs, right? So the first currency is the base currency. The second currency is the quote currency. I hope you get that right, right? Is a quote currency. Second is a quote currency. Now, stop loss, I talked about that in the previous slide, is a limit loss automatically. Take profit, locks in your profit automatically. Right? So, equity is the total value of your account with plus or minus the open trade, whether profit or loss. You understand that? So, I hope these terminologies are easy. So, I would like to do just a short recap. P, if I talk about this, I said is the percentage in price movement, smallest price movement. Lot size is the amount, is the how much trade, right? Lot is the right. So lot is how much you are trading, right? The size of the trade. And talk about the mini. We have the standard lot, micro lot, and mini lot. As time goes on, we'll explain that. So next one over there is leverage. Bold capital to increase position size, bid and ask price and spread price, right? So spread is the difference between the bid and ask price. Next one over there is margin, equity, and free margin. So margin is the amount required to open a trade. Equity is the account balance plus or minus your any open trade, whether profit or loss. The stop loss and take profit. Stop loss automatically protect your account, right? Take profit automatically locking profit for you. So, and those are the stop loss and take profit are the risk and reward control tools, right? And the currency pairs, they are for example, I give an example here, Euro USD. The first currency is the base currency, the second currency is the quote currency, right? And I hope you understand this very well, very well. Please, if you don't understand, please go over the video again and ask question. Go over the video again and ask question, right? So thank you very much. Now, next video, I'll be talking about understanding the big picture, right? The financial market, understanding the financial market. So thank you very much and see you in the next video.